Welcome. I am Eric with Muathe.com, and I greet you, beloveds, in the love and in the light of the one infinite creator. So today we are going to be taking a look at a stock that has had a recent bounce and see what we can learn from it. This is end of January 2022, January 31st. All right, let's take a look at a stock here, and the stock ticker symbol is FICO. And I want to focus on this recent bounce to see what we can learn from it, because given the recent market slide in January 2022, there could be an opportunity, if the market truly bounces, for some upside recovery and a need to take advantage of any bounce in some of the stocks that have seen major drops. So let's see what we can learn from it. So again, coming into end of 2021, we had a reversal from the lows of November all the way from about, let's call it 340-ish to the current highs of about 500. So a nice swing trade in a couple of months from the lows here. So I can show you where I think this bounce comes from. If we take a look at the long-term monthly chart, in fact, it's going to be all data monthly. So this is all data monthly, and going back all the way to early 1992. Okay, so let's go to the lows right here from, let's call it, mid 2009, when we clear this RSI level right there, and then we can use that for future reference based on my uniformity method. Links are going to be in the description if you want to understand this uniformity concept. So you draw it like that. By the way, I should mention that this line happens to be around that approximate 38.2 RSI level. So it's a meaningful area to watch for reversals. So we come close here to the lows of 2011. Since then, the next bounce on this line comes 11 years later, almost exactly 10 years later, in 2021, for the lows right there. So that's where the reversal comes from a long-term perspective. Now, there is another view I would like to propose, because these charts are jam-packed with information. So much information. You can write a book on one single chart right here. But what I can do is take the highs here from 94, early 95, and connect it to the highs of 2001, extend that line, and it's going to look something like that. And so what the line gives us here is it connects to the highs here, 94, highs of 2001 on the RSI, touches the highs of 2011, and then something happens that changes things. There's a breakout here in late 2011 right there. By the way, that breakout in late 2011 matches very well with my method, which I call the ultimate Muathe breakout. Again, links are gonna be in the description or on my YouTube channel. Now, since that breakout, this black line has been used as support on a long-term monthly basis. Every time the market has come to this line, it has bounced, and you can see here late 2021, it bounced exactly on that black line. So that's where I would propose the bounce came from during the lows right here of late 2021. So if stocks that you own or are interested in are about to recover, I would also take a look at the monthly chart and look at the RSI and see whether you can understand if there's a bounce taking place based on the methods that I discuss. Which brings me to the current weekly chart. So right now we can see, as we begin the week here, January 31st, it's a Monday. So right there, it seems like it's a little bit of the stock is thinking. whether it wants to go higher or not. Now, I want to show you that on the weekly now we are coming to possibility of resistance if you connect the highs of the RSI. There. So all this is well defined and we are trading right there. So in other words, we would have to clear this line before we can go higher. We can also see that if we take a look at my uniformity concept, figure out where we broke off from the highs. The break takes place right here again, off the highs there of summer 2021. Draw a line from there, and you can see that it is also showing this is where a decision needs to be made. It also happens to be slightly above RSI 61.8, so we can start looking at this area for potential for resistance. So if the stock is going to go higher, it's going to have to clear these two lines. Failure to do so means that the next meaningful swing trade direction is actually down. So we've taken a look at how to use the uniformity concept and how to use long-term trend lines using the RSI to determine entries and potential swing trade exits and potential breakouts. And so it is. I am Eric with Muathe.com, and I leave you as I found you, in the love and in the light of the one infinite Creator. Go forth rejoicing in the power and in the peace of the one Creator, Adonai.